Traders, I want to welcome you to the event. My name is Sean Kozak, and I am going to be your host for this event. The newly formed partnership between NeuroStreet and Arc AI has brought a lot of questions to the forefront, and I just want to kind of bring to context some of the excitement, the anticipation, and really the opportunity that comes with the development behind Arc. To give you guys some background, Arc AI is not a new company to us in terms of people. We've been working with the development team, several developers from different landscapes, so to speak, and they've actually been instrumental in even developing a lot of the products that NeuroStreet has brought to market in terms of indicators and algorithms. So what they've decided to do is create a product line, and we're actually going to be the company that supports it from the front end. So for those of you that are wondering, NeuroStreet is going to be the marketing arm for Arc developers, as well as we're going to be handling licensing and support. So if you're wondering about, credibility, if you're wondering about anything to do with, who are they or what, just know that they're a bunch of developers who are developing really high-end products, and they work with us to deliver them to the market. And the nice part about it is that they only develop sophisticated tool sets, like very, very sophisticated tool sets. And what's one of the reasons why we work with them. It's one of the reasons why our architectural team has collaborated with them. And if you've used any of the NeuroStreet products, you can kind of get a feel for some of the advancements that we're going to be bringing forefront here, not only in today's webinar, but in many webinars to come. There's actually probably about 10 products that they're going to be bringing to the forefront here over the next 12 months. And I've had the privilege of communicating and working with their team and putting them to motion. So that being said, guys, if you have any questions on Arc or if you need any assistance, please note that NeuroStreet's handling all of it for them. And we will be happy to guide you via email, phone support, no questions asked. The other side of it too is that this is a recorded event. If you can't stay for the entire event, no worries, guys. We will send out the recording with any special promotions or any of the information that is required moving forward. And if you have questions, please type them in the chat box. I'm assuming you will have questions. If I don't get to them right away, please note that I will. I'm just following the process of the presentation. Got lots to show you. And that way we can get them. We'll reserve some time for Q&A at the end. Yeah. So Pam's asking a great question. Is this included in the gold package? Absolutely not. It's not even the same company. We're just the forefront of selling it for them. They're a partner arm. They're a partner corporation. They're a development company. Yeah. So it's their products. It's different. It's completely. It's not even NeuroStreet indicators. Yeah. So just so you guys understand that. All right, traders. So volume, speed, and range. Okay. And volume, speed, and range is the three most powerful concepts in the financial markets. How many of you guys use volume for your trading? Can you guys give me a yes or a no? Right? Many people. Speed. How many of you guys look at order flow? Look at the speed of the tape, the speed of the market flow coming in. Many people do. Many traders look at the print. Many traders look at the order flow, right? Complicated stuff, right? What about range? How many of you guys are using volatility in your analysis? How many of you guys use the volatility for studies, stop losses, speed of market, that type of stuff? Well, what we've been able to do with their developers is build a tool set. What they've done is they built a tool set that allows us to look at when volume, speed, and range are a major important factor based off the time in which it's taking place. And I'm going to talk about what arbitrage in just a moment. Please note that anything we do here follows the same process under legal requirements. We're not here to give you advice. No one's here telling you to buy or sell. It's your money, your trading. You have to do your own decision making, right? And past performance never guarantees future results. That being said, traders, if you have any questions on legal requirements, we always have to cover that here before we get started. Okay. So I want to talk a little bit about what I'm going to be doing for this event. We're going to talk about what we want when it comes to using tools and in why things are happening. So I want to talk about why things happen. There's if you've ever noticed, like, certain things take place and then explosive moves happen in the market. Do you notice how, like, there's periods of time where the market goes quiet and then all of a sudden something happens and the market goes expansion, right? Like the big moves, big trends, big reactions in price. And there's a reason behind that. There's an impact. Something has to happen, okay? Something has to happen in order for us to be able to have an output like that in the market, right? Traders will say it's pumping. Some traders will say, tweets, that kind of stuff. But at the end of the day, that is marketing. That is a knowledge that traders build a psychology around, but they still need to be able to step into the market and facilitate trade. Price does not move unless trading activity takes place. And what we need to do is we need to identify when really specific things are happening in that trading activity that are creating explosive outcomes. And we're going to talk about what arbitrage is in just a moment. The thresholds are really important because it allows us to modify and adapt the arbitrage criteria. And we'll get into that once we go into what arbitrage is. I'm going to show you some examples of how to trade arbitrage independently. And I'm also going to show you how to trade arbitrage in context with other trading indicators and systems so that you can see the power behind what arbitrage is actually doing. And arbitrage is a term. It's a term to identify an anomaly in the market. Options arbitrage is often used. We see arbitrage used in terms of measuring discrepancies or certain types of impactful events. There's many different ways to define arbitrage, but when we look at it from a trading perspective, we want to know when one thing is much more powerful than the other. It's because something's happening. There's something that is unusual taking place in the market, and we're exploiting that opportunity. Okay. Now, we are going to be giving away a free license today. So if anybody in here is excited about that, we're going to run a draw. We'll give a free software license away from this. And we do have partner pricing set up with ARC so that we can offer you the best discounts moving forward. Okay. So that being said, how many of you guys are ready to rock and roll? Can you guys give me a yes? No, maybe so? Let's kick into gear. So the truth is, we all want the same thing. And I like to lead with this because we all want to make money. There's no question about it. We all want to limit risk as best as possible. You can never get rid of it completely. But to trust and believe in what you're doing has a lot to do with fear, right? And it has a lot to do with, believing in your strategy, believing in the system, believing in the tools, right? But what's really, really driving all of this is the hard right edge. Like, what is about to happen, what to expect? How do we forecast things with evidence, right? Because it's one thing to have an opinion, but if you have evidence of an anomaly stepping into the market that's creating outputs on a regular basis of high significance, there's a story behind that, right? There's a story behind that. And whether you use it for day trading or swing trading or investing, it can be used interchangeably. And so 3 of these things are based on what we actually want to happen. And the only one that we really need in order for us to make better decisions is understanding how to forecast the hard right edge before it happens. Now, if you knew a big move was about to happen, how would that help you? Can you guys tell me, like, if you knew that a big move was about to take place, do you think that would help you? If you could say, based off this evidence, based off this information, I've seen so many big moves happen as a result of this. If I could show you a tool that's going to predict that, that would be a huge win, right? Now, if you knew when a big opportunity was taking place, how would that affect your confidence? Like, you'd probably be taking less trades randomly and be waiting for specific criteria to happen, right? It helps you with filtering, helps you with better trading. And unexpected events, nobody knows them. That's why they're called unexpected. And the only way to understand unexpected events is when something random happens out of context. We have normal volume taking place, normal speed, normal range. It's normal. But when one of them go out of kilter, there's something going on. There's something going on in terms of orders. There's something going on within liquidity, speed of pace. And this is really not doable to the human. Like we as individual traders cannot do this. We cannot make these types of decisions without using an algorithm or a computer to do it for us. And so all of this slide relates to forecasting. It all relates to being able to predict the hard right edge. It is possible. A lot of traders will probably question, well, that's, everybody has an opinion, but the truth is this is based off objective information, not subjective thinking. Okay. And we're going to get into the criteria here in just a moment. So I want to talk a little bit about volume, speed, and range so that you guys understand what we mean by that. Volume is the study of liquidity. Okay. Volume measures participation in the market based off liquidity of buyers and sellers. And it's an institutional driven concept. Retail traders do not impact the volume. Even if you have a pump where you've got a whole bunch of random retail traders coming in, unless it's significant amount of money coming in, retail traders are not impacting the liquidity of the market. So therefore, anything to do with volume is institutional base. So when you see volume arbitrage or volume anomalies kick into the market, you know that something is going on at an institutional level, right? This is really, really important to understand this. Now, when it comes to speed and range, speed is the pace, the frequency of activity that's coming into the market. A lot of times traders will look at the tape. A lot of order flow traders will use order flow software to transfer that data into the charts, like we do with NeuroStreet, and there's a lot of other vendors that use order flow tool sets, right? But the speed is going to be based off of the emotion behind the decisions of traders. So normally volume will be independent, speed will be independent, right? And then range is the movement. It's the movement of activity from high to low of any type of criteria that's being measured that can be either small or large based off of different seasonalities and different normalities in the market. Now, the reason I want to give this context is because these are the three probably most important driving factors that are taking place with every trading system, with every trader to some context. Can we guys come to an agreement on that? How many guys would agree that volume, speed, and range are very important factors? Absolutely. Absolutely. So what we're going to do is I want to talk to you about what the arbitrage meter is doing and how we measure arbitrage. When we measure arbitrage, okay, when relating it to trading, it's identifying an unexpected anomaly in underlying data. It is data driven. It is not opinion based. It is not indicator based, meaning it's not based off of an EMA. It's not based off this and that. It's based off of indicator data, right? Volume data, pace data, range data. Okay. So what we're looking to identify is when one of these three are randomly, unexpectedly creating an anomaly that is unusual for what's been taking place based off normal activity. Okay. And when volume spikes, okay, volume spikes and range or speed, okay, stays dormant, this is volume arbitrage, okay? When speed spikes and volume or range stays dormant, this is speed arbitrage. When range spikes and volume and speed stays dormant, this is range arbitrage. The question is, what happens when arbitrage is true, okay? We want to be prepared for an unexpected event to occur in price movement. And these events can be quite extreme and they can produce amazing trade opportunity in the context of strategy development. So does everybody kind of understand the premise behind arbitrage? Does everybody kind of understand what's going to happen? One of the things I want to do is I want to talk about what a threshold is. I want to just draw little percentages here. 1 second here. We're going to go into this. 1 second. I'm just going to draw on the charts here for a second, just so you guys can see, and we're going to go into some demonstrations here in just a minute. Okay. So I see a lot of questions coming in, and we'll get to them after. Pam, I'll address your questions after. Okay. And we'll get into that in a minute, because the whole purpose is I want to make sure you guys understand this, and we'll go over all the Q&A at the end of the event. Does that sound good, guys? Can we agree that Q&A can be reserved to the end of the event? That'd be great. So what we're going to do here is we're going to talk a little bit about, why is this? There we go. So when we have the thresholds, not sure why it's not allowing me to draw there. Give me 1 second, guys. So what I'm going to do is I'm going to see these little white lines that are going up and down here like this. Okay, these little white lines that are going up into the grid, right? You can see that you've got volume, speed, and range, and then there's a white line that's going up and down in the middle, cutting these off. What those are thresholds. Those are threshold markers, 25%, 50%, 75% of the volume data being measured, okay? And basically what it's doing is it's going to allow us to set thresholds and criteria. Volume needs to be past a certain threshold in order for it to create arbitrage. Range and speed have to be less than a certain threshold in order for volume to be impactful. Very, very important things to understand, but we create the thresholds so we can identify them, modify them, and we can adjust them as the market needs us to, or as we want for testing and optimization. And we're going to get into this in just a moment. So let's go into some examples. I want to talk about some trading examples, because I think examples are the best way we learn as traders. If we're going to use a tool set, let's see what it looks like and how it can be used and where we can actually use it to exploit an opportunity. Okay. So there's two ways to leverage the power of arbitrage. Okay. Arbitrage can be used independently, meaning you could literally just trade arbitrage as a system. And we've got rules around how to do that so that you can understand it. And I'll show that on the next slide. Okay. But this can also be used with other tool sets. How many of you guys use volume profile, supplier demand, order flow, or support and resistance? Those are the four big pillars, right? We're going to use volume today to show some great examples. And you take the concepts and you can apply it to every other tool set. But the main objective here is to identify when arbitrage is stepping in at areas of interest of significant importance. This is an example of signals that you're seeing on the charts. These are trading opportunities. These are arbitrage signals. These bars that have a white racing stripe are identifying an arbitrage output. And they can be traded. There's no directional bias to them, meaning arbitrage does not define a buy or a sell. It defines an anomaly. It defines an unexpected event is about to occur. If you notice, every time we got a signal, a really big move happened right away. There is no buy or sell. There is no long or short bias to arbitrage. It is simply a data-driven signal. And that data-driven signals are going to happen at certain areas. Obviously, if you're on long areas, support, value area lows, demand, these types of things, and you start seeing arbitrage, clearly that's a buying opportunity that is going to be presenting, right? Same thing for selling. If you're in resistance, right, and you have an arbitrage opportunity that's creating some type of an output, that's going to tell you that, okay, there's something about to happen here in this selling area, right? And that's the main objective, and we're going to talk about that here today. So what you're seeing here is some examples. You can apply it on range charts. You can apply it on minute charts. One way to trade arbitrage independently so that you guys can define a direction. And we're going to get into trend. We're going to get into some examples, but here's a great example of how you could take arbitrage on variable range candles. Okay, this not applies to Renko. This is for variable range bars. And what we do is whenever we produce a signal, there's something going on in here. This one is measuring volume. So that's a volume arbitrage signal, okay? And what this means is during that bar, we had really significant volume coming in, but the market hasn't reflected in terms of speed or range, which means volume is stepping in, but the market hasn't adjusted to it yet. And normally that's what accumulation or distribution is. There's three signals. There's a volume signal, there's a speed signal, and there's a range signal. I'm just going to show you examples of all three of them, okay? From a volume perspective, what this means is when volume arbitrage is true, it means that volume is stepping in abnormally on that bar. And then normally what's going to happen is you're going to have an output from that volume. Does everybody understand that? Accumulation and distribution. And so what we've done is we've created a way for traders to identify having a direction around that volume. When we break the range of these arbitrage bars, right? We break the range with the direction of the market. That's clearly signaling which way the arbitrage is about to explode. Okay, and these are how you can use arbitrage on variable range bars. You can also use it for signal locations for scalping. You can use it for trend directions. We're going to talk about that in just a second. Does everybody understand this concept? We're going to go into some live examples. We're going to show some examples here. Okay, give me a yes that you guys are following along and you're understanding it. Perfect, Louise. Steve, great. So here's a really important picture. Okay, here's a really, really, really important picture. How many of you guys know what a volume profile looks like, right? I wanted to keep it super basic, but I wanted to also make it so that it's very understandable, okay? How many of you guys are familiar with low volume nodes and high volume nodes? If you've been in our trading rooms with NeuroStreet, or if you've ever been on any events, you know, in other environments, the thing here is to understand that volume drives a lot of decision making, right? Well, how many of you guys have gotten into a trade only to wish you wouldn't have gotten in so soon, or maybe your entry timing was off, or maybe you just didn't know when to be participating? You don't want to always get in on the first touch, or if you want confirmation, that type of stuff, right? Well, there's a few ways to look at this picture in context, okay? When we're going from high volume area, okay, when we're going from high volume area here, let me grab a cursor. When we're going from a high volume area down here, okay, and a sec here. When we go from high volume to high volume, okay, let's just go like from here. Let's just draw a little line here. There's a high volume node, right? And then there's a low volume environment. And then it goes up into high volume. When we pass through this environment, do you notice where the arbitrage steps in on the pass through? It's the market's pushing into volume. And then as soon as we get into high volume node territory, we get arbitrage on the other side of it. Boom. It's about timing your entries. It's about understanding, okay, this is when you want to be using the tool set to be able to identify where the trading opportunity lies. Now, here's another example of when it came back down to test off the point of control. Do you notice how the arbitrage happened right here, not coming into it right before the big move happened? This is a great example. Here's another example of it coming back to test the low volume node on the retest right there. Arbitrage steps in and then the move kicks in right after. Once it breaks the volume at the bottom, look at how arbitrage breaks in and pushes down. It's all about understanding why the market's doing what it's doing. It's not just about the areas. It's about identifying, okay, this is when the move's about to happen. This is when there's something taking place that's going to drive the market price levels because of this information. It's data-driven analysis, right? It's not, I think the market's going to do this at low volume. I think the market's going to do this at high volume. What we're doing is we're using these areas for context so that you can identify when the arbitrage is actually stepping in to give you evidence that there's something about to happen. And this is why arbitrage is a really, really specific way of measuring trade data. You cannot do that manually. It's something that's done very complex behind the scenes. And the key here is it's all about timing. When you have this low volume node that came in, do you notice how we pushed through the low volume And then we got the arbitrage signal there, right, for the long, which happened after coming down and forming the low, and we got it on the retest. And then take a look at what happens. And these are just examples, guys. Like, there's no cherry picking here. There's no, you know, not trying to like find only the best trades. I want to give market context to why arbitrage is probably one of the most powerful things you'll ever use for timing entries and getting ready for explosive actions in the market. Okay. Here's a great example of direction. Okay. There's, when you look at direction and you look at, okay, the overall direction is up or down. Okay. If you're a directional trader, okay, how can you use arbitrage to get into the market? It has nothing to do with your stop sizes or your target. It's to do with, okay, every time arbitrage took place, a really, really big reaction happened. And if we look at this, what's the direction here? What is the direction of the market in this example? Can you guys tell me, what is it? Up, down, sideways, what? It's up, right? So if you're a directional trader, you want to be trading along the market, right? So here's the key. There was a lot of buying that took place that created that arbitrage. You could be buying in these arbitrage locations because look at the directional output after every signal. We don't need to be perfect about understanding everything. And this is all subjective in terms of 5-minute charts, 15-minute charts. We're going to show you some examples on other time frames. But I want you to understand that the power of arbitrage is like saying, okay, when it happens, you're going to see an explosive move come from it. There's an anomaly. This is a mean reversion trade down here. You can see down here at the bottom, there was a mean reversion trade where the market came, you know, far away from these areas. The market put in arbitrage and we retrace back in. But you notice how we don't have arbitrage in all of this activity here. Might be due to the thresholds, might be due to the might be due to the thresholds, it might be due to just the activity. Maybe volume and speed were balanced in those situations, and therefore we didn't have unexpected opportunities. I think the key here is to understand what it's telling you and why it's telling you that. Does everybody understand that? So we're going to go in here to some live examples. Everyone is sleeping at that time. Okay, I want to go into some live examples because I like to look at real context. So some of you guys have, you know, like some of you guys have seen, I think some of you guys may even own it. NeuroStreet has a product called the Barometer. Barometer looks at volume, but it's using a different algorithm, and it's also not identifying speed or range. It's completely different. So to kind of compare the two, it's not. What we've actually done is we've integrated the same type of logic for version 1 and version 2, and we'll show you what that means. Inside of the code base, there's actually two modes inside of this. Version 1 is like basic arbitrage. It's kind of like what the Barometer would do with NeuroStreet. NeuroStreet, if you guys know what NeuroStreet has, a barometer tool that looks at direction. It's a multi-time frame tool, but it also has volume arbitrage in it. Version 1 is a very basic level of that. It's kind of like it's the sandbox, right? Version 2 is a much more sophisticated, more, I would say, actionable arbitrage measurement, because it's two different ways of measuring the arbitrage. And you get a chance to use both of them. You can test the signals back and forth. For the purpose of this, I'm going to use version 2 so that it's more stable around what I want to show. I want to show an example on today's activity on the S&P. Just looking at this is volume arbitrage on the top. The middle one here is speed arbitrage, and the bottom one here is range arbitrage. Okay, and I've got one on a 5-minute, one on a 15. I've got one on a Renko, and this can work on any market. You could use it on big time frames, small time frames. It doesn't matter. Okay, but what I want to do is I want to share with you volume for a second. Okay, I want to map out just some key areas of interest. High volume nodes. I was just gonna put some high volume nodes here. Yeah. The high volume came in here. Okay. I want to talk a little bit about what's happening on high volume. As soon as we come into the volume node, okay, the volume arbitrage kicks in and then we have an explosive move to the upside. As soon as we come into the volume node, as soon as the arbitrage kicks in, the move happens. If you look at it from this perspective, it's not this that you need to be paying attention to. A lot of traders are going to get ready to go short up here, right? Coming in as a reversal trade. You don't need to do that using arbitrage, because arbitrage will tell you that when we're at this area, this will tell you when it's time to get in, because this is a huge volume arbitrage signal that is happening at an area of interest. Does everybody understand that? Yes, that makes sense to you, because it's about understanding market timing at areas of key importance. Okay. I want to go over here. I want to talk about direction. Okay. I want to just talk a little bit about what's taking place. I'll use low volume as an example. Low volume data here. Okay. And low volume data down here. So as a low, I like to show different ideas because arbitrage has no bias. Arbitrage doesn't care if you're using supply or demand. It doesn't care if you're using support or resistance. It doesn't care if you're a scalper, a day trader. Doesn't matter. It doesn't care if you're looking to go long or short. Arbitrage tells you when to expect an explosive move. Okay. Now, if you're a low volume trader, what do you think this arbitrage is going to do to you here? This one, you would have taken a little heat on this. I'm not going to cherry pick some trades. This one will give you a little bit of heat, but the volume node was quite extensive. There's a big volume node here, right? And if you take a look where the next signal happened, another arbitrage came in and a huge explosive move came in out of that volume, right? And this is what's really important, is to know that inside that volume node, this arbitrage is the key behind why that move took place. Does everybody see that? Yes, that makes sense to you. I like to slow things down. I like to show, because a lot of traders have different experience levels in here. Some of you guys are very good with trading. Some of you guys are new, right? Let's take a look at this. You see how this came in here? As soon as that low volume node got hit, what took place? Okay. Now you could say it's low volume, yes, but arbitrage is the spike that's happening at that time. Low volume areas, this LVN is an AOI. It's an area of interest. The arbitrage is an immeasurable activity that's taking place in the signals that is measuring the data that you're telling it to measure. And if you want to use speed signals, if you want to use range signals, you can. I want to give you an example of swing trades on a 15-minute chart. Okay, this is a really, really great example. Okay. So let's just go back to we're getting arbitrage on this current bar, which is interesting. Let's go back to this one here and show you this. Okay. Take a look at this candle right here for a second. I'm going to draw a box around it. The range. Right there. We didn't really break out of that area until this candle right here. And this is what I want you to pay attention to if you're using it from a swing trading perspective, or because what's really important here is you understand when to get in. You could get in on that bar, but what I would encourage you to do is I would encourage you to wait until the arbitrage starts to show the direction of the market. Because arbitrage is non-directional, right? It has no bias to direction. So if you're a long trader, you're going to use arbitrage to the long side, but you don't want to just step into arbitrage on bigger time frames until you see the market moving in that direction. And this would be a great example of the bar that you would understand that happening on. And then you would then extend your entry area as a swing trader, because it's not about, a couple ticks at that time. This would be your area to get into that market. This would be where you would buy that market in this arbitrage location, because remember what arbitrage is doing is measuring anomalies based off of important data but it's really measuring those anomalies relative to price, right? Volume and how is it expecting things to happen at this price level. And you can see the result of that arbitrage. Okay. Now, the reason I'm showing you this example, and I want to show you a couple others, is let's just take a look here. What is the direction? What is the direction? Up or down? So any shorts, if you are playing arbitrage to the short side, you're going against the big picture, right? More aggressive, right? Wouldn't it make sense for us to only trade arbitrage to the long side? Because when you trade arbitrage to the long side in an uptrend, most likely that's where the bigger moves are going to kick in. So if I look over here to the very first signal, and I just want to go back and kind of give you some context, how would you filter trades? I would not take this trade. This trade here broke down from it. If I'm a long trader, I wouldn't trade that arbitrage signal. This is a 15-minute chart. It's a big perspective, right? This is not a day trading time frame. Okay. This one here, okay, this one broke down from this arbitrage. So these were two short signals. You could have made money on the short side, but if you were a long trader, you would not take those signals. You wait for the next opportunity. This one here did not break a direction. It broke down from that area. So therefore you wouldn't trade to the short side. But as soon as you get the long opportunities where it breaks to the upside, that's your cue to get into the market, right? Let's take a look at the next one. And I'll go into some day trading examples here in just a second. Let's go find it. This is a great example. We had back-to-back arbitrage, but it was at the close of the session. Do you notice this? So we had arbitrage kick in at the close and the open of the Globex. So what we want to do is we want to wait for the market. The range of this arbitrage is here to here, right? This is the range. Until we break to the upside of that range, we're not going to take the long. As soon as we break to the upside, that is our cue to get in on the arbitrage, because that's when the move is about to happen. Okay, and if I draw a box around it, and I just try to show different examples to different types of traders, right? We're only trading along in an uptrend, short, and you could trade counter trend if you choose to. I'm just giving you guys context of examples. Same thing here. This one here broke up. If we're going to draw arbitrage, I like to wrap my candles around the range of this. Okay, I would have looked to go long in this environment here when it came in. Did get a bit of heat, but it's all relevant to stop size. You're on a 15-minute chart. Does everybody understand this? Now these are speed signals. This is, or excuse me, range signal. This is not volume arbitrage. If I turn volume arbitrage on this chart, it's going to look completely different. You're going to have volume-driven arbitrage. These are range-driven arbitrage signals, right? If I go into the middle one here, this is speed-driven arbitrage signals. Okay, and the top one is volume. Okay. Now, how many of you guys think you could integrate this? All three at the same time? No, I don't know. You could include all three of them on the same chart. You could probably imply all three of them on the same chart. You could turn all signals on. Yes, you could turn all signals on, and you could set the thresholds for that. Yes, you could. We have the ability to control that threshold. Okay. Okay. Makes sense. You could apply them all. You could recalculate the signals and change the arbitrage. Okay. However, I would encourage, and this is me giving some feedback as to exactly, Louise. Yeah, exactly. So volume arb is probably going to be the most impactful. Now, I'm not saying you shouldn't look at speed or range, but volume is going to be institutional liquidity-based arbitrage, which is really powerful. So if you just take a look at these signals on the top chart up here, just looking at this volume arbitrage, okay. Huge move comes from volume arbitrage. Huge moves come from volume arbitrage. Really, really big moves come from volume arbitrage. Really explosive directional moves come from volume arbitrage, right? So this is why I really, really think that if you were to spend some time implementing this on your charts first and foremost, you would want to do so using volume. And then once you've got comfortable with volume, you could go and test the speed and test the range, right? And the difference here is the thresholds. Like if I want to be very specific with how volume and this is created, okay, then basically I can change the threshold. If you look at volume arbitrage here on the top, I've set it to an 85%, which means volume needs to be 85% more than the average volume that is basically coming into the market, while speed and range are less than a certain threshold, right? Like it allows me to be able to control how strong I want the signal. If I want to be more loose and have a whole lot more signals, then I would alter those to be slightly less restrictive. If I wanted it to be very, very restrictive, I could bring this down to say 20 or even 25. I would probably have way less signals. And it would be very interesting to see the output on some of that, you know, based off of the way the market reacts in some of these areas. We'll have to see how well the market, and I haven't tested on different settings. I just normally have the defaults because we've tested the defaults quite extensively. Pam, I see your question. I'll address it publicly because it's really the previness of any business owner. So I'll give you some context to that in a second, right? So no need to panic, Pam. We wouldn't be representing anybody if it wasn't part of it. So take a look at this big impact. Okay. So you can see these signals down at the bottom. These were really, really big signals here. I can't draw on the chart because of the volume profile, but you can see that here. Okay, you can see the volume signals coming down at the low here. Big explosive move, but this is very restrictive. I wouldn't do that here. I would probably go up to maybe 30. I would start testing the 30. And this is where you get a chance. Every market's different, right? Because volume is different for every market. So if you're going to test thresholds on the S&P, you would test it differently than say thresholds on gold. Gold is much thinner than the S&P, right? So let's just increase the thresholds a little bit. You should see a few more signals coming in. We'll give it a second to load. Remember, it's calculating the volume and the speed and the range to look for the thresholds. You can see now we have a little bit more signals, right? And you'll see that, look at where the pass-through happens after we break through here, right? As a directional trader, right? If you look at the long side of things, as a directional trader, you can see here that this market is trading up. So this would be a long opportunity. This would be a long opportunity down here, right? It depends on the direction and depends on which bias you want to have in the market, okay? Does that make sense, traders? Hopefully that's a great example of what this can do. I mean, I think at the end of the day, I want to go back to this. I want to go back to this question. I want to really kind of address this. If I can show you when a big move is about to happen using data-driven analysis, how is that going to help what you're doing? Obviously, it's going to improve your entries. It's going to improve your expectation. It's probably going to improve your confidence, right? And we do this without having an opinion on the market. We do this by basically relying it on data. Okay. Did everybody understand that? How many of you guys think you could impact this into your trading? Give me a yes if you feel that this would be something that you guys could really kind of take to the windstorm. Yeah, exactly, Graham. Yeah, JD says yes. So what I want to do though, before we go into any more examples and go over some Q&A, there's probably got a lot of questions. I see them coming in, and we'll address, Pam, your question publicly, so there's no hidden agenda. Okay. So let's go in here and just find the slide. I'm going to run a poll. Okay. It's actually very simple, Thomas. We create the thresholds. The user documentation explains it really, really well. The video documentation films it really, really well, right? And let's go poll. How many of you guys want a free license? I'm going to put you in the name of a draw. Okay. Okay. So I'm going to launch this. There you go. So what we'll do is we'll draw the name, and one lucky winner in attendance will have to be here. Yeah, please answer in the draw. You need to fill out the poll. Please answer the draw, fill out the poll, right? We want to be able to give a free license away to somebody. Your time is valuable and we appreciate your attendance. Yeah, we will announce the winner afterwards. We always like to do that whenever we do big events. Charles says, pick me. I am lucky. I always win. That's good attitude, Waleed. That's a great attitude. Excellent. Excellent. So I think we're going to stop it now at 1, 2, 3. If you didn't get a chance to put your name in the poll, rest assured, send an email into Ashley and we'll add you into the draw. If you're on a mobile device or if you're on a tablet or a phone and that kind of thing, right? Just let us know. Okay. Now, I'm going to do here. I'm going to edit another poll. I'm going to edit another poll here, and I'm just going to, just as more for support, and I'm going to go explain the details in a sec. We'll go over pricing. I'm just going to run another poll here. I want to ask you guys some questions. So, okay. I'm just going to run a poll right now, guys. There we go, and we're going to save it. So I'm gonna just run another poll in here. John says, I'm in a lot of trade rooms. I can promote the hell out of NeuroStreet and the new company. Well, I think there's some questions about the new company. So I want to kind of get that out of the way now, because in business changes and many things happen and expansion happens and people buy each other out and mergers take place and, you know, corporate joint ventures happen all the time. So we're not a small organization. We have a team of 12 people plus 5 development firms we work with. We're one of the biggest players in the space. So when we bring products and we partner with companies and we do things, it's really our right to do so. It's really our right to want to do these things. It's business, it's expansion. You don't get excited if Facebook buys Instagram or they want to do business together, these types of things, right? So the big thing here is I just want to give you guys some context and some trust around this. We are going to be handling all the licensing for them. They will be developing products and we will be selling them, right? And we are a joint venture partner. So ARC is a separate company, and therefore we will be handling all the support. We will handling all of the needs of licensing or anything of that. And if you guys are here because you really like NeuroStreet, well, then you can understand the reputation that comes with that, right? No, because these are not NeuroStreet products. These are not owned by NeuroStreet. They're partners with NeuroStreets. We share in the expansion of that, but it's not all NeuroStreet, right? So you got to understand, like, we have other companies we work with, and I'll just kind of give you some context so you guys can understand that, because I know it's a new event and it needs to happen. So I want to bring this to market, right? So rest assured, and I'm just going to explain, and this is me as the owner of NeuroStreet. I'm coming in the front of hundreds of users and I'm saying we've personally vouched for the reputation of the people behind the business. We are a partner with them. We work together. We are part owners in the company, right? So therefore it's not, there's no hidden agenda. We are a joint venture partner. No different than if we were to go into these other companies here. If you've ever seen us bring in other company products, we sell combines, we do affiliate relationships. We also have, we are a reseller for cognition software, right? No different than that. I mean, give you an example, COT Base, we brought in their products a while back and sold their commitment to traders tools as a joint venture. So it's the same framework. The only difference is that the concept of ARC is really just development. They develop for NeuroStreet, they develop for other companies. And we're just a forefront to that, because developers don't necessarily want to run trade rooms. They don't want to run classrooms. They don't want to do this, et cetera. And not every company wants to do that, right? So just to kind of give you context, I know Pam was saying, the company looks like it was just created. Absolutely. The website was just put up recently. No question about it. But would NeuroStreet be servicing that, right? Would NeuroStreet be running the licensing with our team and support and working as a joint venture partner? If they were not credible, absolutely not. We're too big of an organization for that. And we're also partner owners in the company. So therefore, there's no hidden agenda on that, right? They're two separate organizations. So I don't hide things from our user base. I don't hide things from customers. I don't hide things from anything. I think it's really important. Transparency is key in this business. Trust goes a long way, and credibility goes a long way. Can you guys agree that makes sense? Give me a yes that you guys agree with that, right? Business to business relationships happen all the time. Business to business expansions happen all the time. Yeah, it's paramount, Graham. Yeah. How many of you guys like our products at NeuroStreet? The developers of ARC helped develop a lot of those products, right? We work with 5 development firms. Absolutely, bro. Expand money, budgets, money. Exactly, guys. So thank you guys for that. I see a lot of positive comments coming in, a lot of positive that, and obviously we're here to service you guys. That. How many of you guys would like to get into the launch pricing and take advantage of this? I'm gonna run a poll here for a second. I'm gonna launch this. Okay. And just to let you guys know some of the other exciting things that are happening on the NeuroStreet front, we're actually making about 50% of our products available on multi-charts. We've got developers coding the expansion of the Gold program into MetaTrader 4, right? So if you guys are looking at using other platforms, we've got a lot of our tool sets. So those of you that are in the NeuroStreet, basically will get advantage of those expansions as well. So there's some really great things. Yeah, this only works on Ninja at the time. Yeah, this only works on Ninja at the time. Yeah. Okay. So I'm running a poll right now. The reason I'm asking this is, as you know, NeuroStreet handles the support and the licensing for them. So I just want to kind of gauge the traction of that so that I can let my team know how many people are ready to jump on board now, how many people would like to talk to us, et cetera, and that sort of things. Thinkorswim has a very complicated code language. It's very basic. It doesn't allow you to do a lot of things, and the platform's very clunky. I just don't really trust the data on the platform that well. And yeah, they've been around for a long time, but they're owned by a big top tier bank, and big top tier banks aren't really retail trading brokers, right? And I'm not saying they're not a good options platform, but I think there's better alternatives to than Thinkorswim. Okay, so I'm gonna end the poll here. What I'm gonna do here is I'm going to go over pricing, and then we're going to go over Q&A, and we're going to open up the Q&A. So retail price is $14.98. We've arranged for a 50% discount on the launch. Okay. The offer expires Thursday. And the order form here, let me just grab the link for you guys. Grab the link here. 1 second, guys. I think Ashley's got it there too, but teamwork is dream work. Got a lot of questions coming in. So there's the order form. Just to let you know, there will be a lot more ARC development coming soon. There's actually 5 products that their team are working on. We're working on them with the team, and ultimately what's happening is we've got some very sophisticated tool sets coming. These are not normal indicators. Like We've got some options pricing indicators coming out. We've got some I think we've got market forecasting indicators coming out. Like there's a lot of things that are coming down the pipeline with ARC, and in parallel to NeuroStreet algos expansions as well. So I just want to let you guys know there's a lot of great things coming. Yeah. So what I'm going to do is I'm going to turn this over to Q&A. And I'm going to go through the questions. So Pam, I think I've addressed your question publicly already, so I don't need to go over that, beat a dead horse. It's quite clear. Let's see here. Yes, it's being recorded. Does it incorporate global order book? It incorporates time and sales data, incorporates speed of pace. It incorporates volume analysis and range analysis. Boris is saying, what's the percentage accuracy? It's a subjective question, Boris, because it really depends if you're looking at volume arb, speed arb, range arb, combination arbitrage, on what time frame. This is not an algo. This is not a system. This is a tool to tell you that there's something about to happen that is extreme, and you need to be prepared for it, right? This is the forecasting on the hard right edge before it happens. It's the best friend to a hard right edge trader, to be honest with you. Right? Because you don't know when a big move is about to happen. You could be at a key area, but until that arbitrage kicks in, it's not going to give you any data-driven indications that there's something about to take place. So you're always wondering, oh, I wonder if this is going to work, or I wonder if the trade's going to work, or I wonder if this level is going to hold. Arbitrage will 9 times out of 10 tell you that.
Hey, Sean, we just had a couple questions coming in about pricing. It's Ashley here. I just wanted to apologize and address the pricing is cheaper than what you are seeing on the screen. It is $7.49. So the $7.95, it's supposed to be 50% off the price at the top, which is $7.49. So you get an extra $50 off what you're seeing on the screen, which is always good. We're not charging you more, we're charging you less. So what you see on the order form is correct of $7.49.
Thanks, Ash. Typo on the screen slide. We're not perfect, guys. we definitely strive to be. We definitely strive to be there for you guys, but perfection is not the goal. John says, I got some suggestions for some partners. How do I reach them? You just send me a direct email, John. I handle all business development and partner expansions. Yeah. So send me a direct email, John, and Mr. John Wick. I don't know if you're any relation to Cano Reeves, but that'd be so cool. Right. Let's continue down here, guys. Patience, there's a lot of questions. Yeah, they do paint lines in real time. It's in real time, Steve. Yeah, so arbitrage is happening as it's happening on the queue. Yeah, and then normally you'll want price to close before making decisions around that, but you can be warned, absolutely. Well, that's a great question, Thomas. Thomas nailed a really, really great question. So if you notice on my examples, I have volume arbitrage turned on Renko charts, but I have speed arbitrage and range chart arbitrage on the time and variable based bars. You're not going to be able to use the speed arbitrage or the range arbitrage on fixed bar type sizes because speed, yes, but range, no. So speed, you can measure the speed of market coming in, but range, no, because the range is fixed on every single candle. So volume and speed can be used on fixed bar types, but range can only be used across the other variable bar types. Does that make sense, traders? Great question, Thomas. Just bear with me, guys. I'm going down the Q&A, guys. I appreciate your patience. There's some questions coming in on the algos. I do have an algo workshop. My team and I have been extensively working on the NeuroStreet arm of the expansion for the algos. We've got an algo trading room launching in November. We've got an optimization workshop taking place this Thursday for everybody, users and non-users. So you can see the work going on behind the scenes. We've got some algos coming out. So just rest assured, guys, one day at a time. But this is exciting stuff. I've got Mr. Roy, NSDA Roy. If you're in our discords at NeuroStreet, you'll notice that he's been optimizing till the cows came home. We're going to be going through a lot of great things there. Yeah, we'll announce the draw via email. Can you, yeah, so can you explain what you mean when you set up the chart as a volume arbitrage, but in the corner of the chart it has a box showing volume, speed, range? Yeah, so great question. So let's go into the details. We have the ability to turn volume on or off, speed on or off, or range on or off, depending on what we want the signals to be doing from an arbitrage detection. Depending on the bar types, if you're using fixed bars like Renko or range charts, you're going to want to use volume or speed. If you're using time-based charts, tick-based charts, volume-based charts, you could use all three of these, right? It doesn't matter, but for fixed bar types, you'll want to use either volume or speed, okay? And you have the ability to control the thresholds between how you want to restrict the criteria around that arbitrage. And then you can also decide if you want all three of them to be on, or if you want two of them on or not. You can definitely, and you can color code the different arbitrage so that you could have like yellow arbitrage is volume, red arbitrage is speed and range. And that way you can see different colors on your chart if you have them all on simultaneously. Yeah. Okay, guys. Thank you. Appreciate it. Yeah. Are the white lines a part of the VSR meter? Yeah, so the white lines are the arbitrage itself. So these are the arbitrage signals. The other thing, if you're wondering here, if you see these, oh, wrong one. These are the threshold lines right here, here, and here. So if I set it to above 75%, that means volume needs to be spiking up here above 75%. But it's not really arbitrage if range and speed is also there, because there's no hidden agenda. The volume, the range, the speed is all factored in the market. What we want to do is want to see if volume is spiking when speed and range is very, very low, because that means that volume is kicking in, but the market hasn't factored that anomaly into the market yet. And that goes for both range, speed, and volume. If I have a range signal on, that would mean I would need to have my range being past a certain threshold, right? And then I would want to see the other volume and speed down here, right? I want to see them lower, because, and you don't need to think about this. Like, it's all automatic. Like, the software will do it automatically for you. That's the best part. You just get to set the thresholds. And if I look at this right now, it's saying that I need range to be above 80%, speed to be below 40, volume to be below 40% of its normalized trading activity. And this is really, really powerful because it's using data that there's possibly you can't do on your own. There's no way you could do this physically on your own. Wish you found me earlier, Graham. Hey, thanks. Appreciate it. Come in late, salary costs is at the end. Let's go over to the costs again. And we get a couple of people asking about pricing. Okay. There's a typo on the slide. It's 745, right? The VWAP algo is coming out soon. It's in final beta, Thomas. It's a sexy system, man. Volume weighted average price algos are really, 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 really different. I mean, as you know, VWAP is a very, very key tool. We have a different type of VWAP for the system. It's sexy. I just can't wait to share it to you guys. Yeah. Have I done back testing on this? Absolutely. Manually, I have, not automatically, because we don't have it integrated into systems. Yes, done a lot of testing for signals, and especially when we were doing the training and the documentation with the developers on that. Yeah. Okay. So, okay. Okay. My brother. Arbitrage is when we exploit an unexpected anomaly in the market, meaning if volume spikes and speed and range are down, or if range spikes and speed and range are up, like the different things, like it's when you differentiate one as a huge outlier from the other, right? Okay. James says, I've been waiting for something to measure speed on range bars forever. Yeah, this is definitely it. It's a one-time fee. Yeah, it's not subscription based. This is just, we're just a reseller for ARC. We're just a reseller as a partner. We're a partner company with them. I mean, they develop products for them, us, other companies. We're just selling it. We're handling the licensing. We're doing everything. So there's no, just rest assured, if you love NeuroStreet, then You don't even need to worry about it. We're doing all the work for them. Yeah. Yeah. It doesn't use, I could be, John, these are some great questions. I'll have to send them over to the developers. So just shoot an email and we'll get those over to you. Those are some complex questions. So I'd have to get my developers on that. Yeah, we'll send a recording out on this, John. No problem. Guys, I see a ton of questions coming in, so I appreciate this. And yes, it'll actually come with Renko bars. So it does come with Renko bars. So you'll be able to install Renko bars as part of that. I forgot to add that. It does come with Renko bars so that you have the ability to use Renko bars as well for Mark. Yeah. So he says on some of the examples, sometimes price went one direction when the big move eventually went the other way. I would not trade those against the direction. I would wait for trades only in the direction off the arbitrage if I was a directional trader. No, it's not on MT4 yet. No, it's not on MT4 yet. Not this tool set. Okay. It does work for stocks. It does work for futures, Forex, everything on the Ninja platform. Okay. Did I answer your guys' questions? Give me a yes if that's if you've gotten a lot out of that. If you learned something, you're excited to see this being used. You know, if you have suggestions on feedback on using the products, or if let us know so that we can talk to the developers and see if we can enhance things. A lot of times the best version 2s and version 3s of things are after our users are using the products and they have great ideas and we add them in after, right? So rest assured here, NeuroStreet and ARC are here to help and serve you as collaborative partners in the space. You know, and you know, if you need any assistance, my team and I are here to help you, and we're also here to make sure that we have all your questions answered. And if you have any questions, let us know. All right, traders, give me a yes if that's it. Excited. Steven says, trust me, wait. If you want algos, come to the Thursday. Come to the Thursday event where NeuroStreet does the algo event. I'll be personally doing that. Because Roy and I have been working for weeks on system optimization, the best bar types, the best time frames for each system. So for those of you who are wondering on that, we've been working for weeks on that. So been in the bunker. It's good till Thursday, Pamela. It's good till Thursday. Yeah, we're testing all algos, Charles, and we're actually putting every system that we put through the same testing process. Yeah. Well, traders, I hope you enjoyed the presentation. I hope you guys are excited to work with us and ARC. You know, from a perspective of development, the biggest thing is your trader success. And I just want to make sure that if you guys need anything, you let us know. We're just an email or a phone call away. Traders, I hope you have a fantastic day. And once again, I'll put the link in the chat box in case you guys missed it. It is a launch discount, so take advantage of that. And let us know if you have any questions. We're here to help. Traders, have a great day.